Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we are cracking open the latest proxy statement from Root Inc. Think of it as the company's annual report card, except it's filled with more legal jargon than a courtroom drama. What's Root up to? Are they making money or just burning through cash? And most importantly, what does it all mean for you, the potential investor? Get ready for some surprising twists and turns, especially when we look at how much the top dogs are taking home. This is Root's official invitation to the annual shareholder meeting, scheduled for June 4, 2025. This isn't just a social gathering, it's where shareholders get to vote on important company matters. They're asking for your proxy, which is like giving them your permission to vote your shares for you. First, they want you to elect two directors, Jerry DeVard and Nancy Kramer, to their board. These folks will be around until 2028 if you vote them in. Think of the board as the company's strategic oversight team. Next, they want to ratify their choice of Deloitte & Touche as their accounting firm for 2025. This is like saying, hey, we trust these guys to check our math and asking you if you agree. Here's where things get interesting. They're asking you to give a thumbs up or down to how much they're paying their top executives. It's an advisory vote, meaning it's not binding, but the board will likely take it into consideration. Wink, wink. If you owned Root stock on April 7, 2025, you get to vote. Each share of Class A common stock gets 1 vote, while Class B shares get a whopping 10 votes each. Instead of sending a paper copy, Root decided to go green and make the proxy materials available online. You should have received a notice in the mail with instructions on how to access everything. The annual meeting is virtual only. To enter the virtual meeting, you'll need a control number found on the notice or proxy card. If your shares are held in a brokerage account, you're considered a beneficial owner. In this case, you need to give your broker instructions on how to vote your shares. Otherwise, they may not be voted on certain proposals. For electing directors, each nominee needs a majority of 4 votes. Approving the accounting firm and executive pay only requires a majority of votes cast. The Series A preferred stockholder agreed to vote with management. Further ensuring these votes will pass, let's meet the nominees. Jerry DeVard, with tons of marketing experience at big names like Office Depot and Under Armour, brings brand expertise to the board. Nancy Kramer, a marketing guru from IBM iX and founder of ResourcePen Marotti, offers a wealth of digital strategy knowledge. Lawrence Hilsheimer, CFO of Greif Inc., brings financial expertise and insurance industry knowledge to the table. Alexander Tim, the co-founder and CEO of Root, brings in-depth understanding of the company's vision and the insurance industry. Douglas Allman, former CEO of the Ella V. Strong Foundation, provides leadership and community building experience. Beth Birnbaum, Kapoor of Mudstack, brings expertise in technology and product management. Donna Dorsey, Executive VP and Chief People and Culture Officer for International Motors, is well versed in human capital management. Julie Shadoric, CEO of Self Financial, brings a strong track record in e-commerce and technology-enabled businesses. Most of Root's board members are considered independent, meaning they don't have any close ties to the company that could cloud their judgment. This is a good thing for shareholders. The board skills matrix breaks down each board member's core competencies. Having a board with diverse abilities allows companies to make better informed decisions. This diversity matrix does not unfortunately include any details about LGBTQ status of board members. The Audit, Risk and Finance Committee, led by Lawrence Hilsheimer, is in charge of making sure the company's financials are accurate and that they're managing risk properly. The Compensation Committee, headed by Nancy Kramer, sets the pay for Root's executives. They try to strike a balance between attracting top talent and rewarding performance. Root's insider trading policy is in place to prevent employees and directors from using confidential information for personal gain. They're also banned from hedging their stock positions, which could create conflicts of interest. Here's how much Root's non-employee directors made in 2024. Douglas Allman got $228,684. Jerry DeVard got $23,686.84, while Lawrence Hilsheimer raked in $279,608 in 2079,6 hashtars. The company wants you to approve Deloitte & Touche as their independent auditor for the year. There is a table for audit fees in 2024. Let's scroll down. Deloitte charged Root $1,147,346 for audit fees. Make sure you always check to see if there are also non-audit fees here. All other fees consist of software license fees, amounting to roughly $4,000. This helps you confirm that the auditor is in fact independent. Alexander Tim, the CEO, got $10,653,100 in total compensation, making him one of the highest paid CEOs in the insurance industry. Mattia Bonakdarpour, President and Chief Technology Officer, took home $7,099,048, took home $7,000 in Boimi 510481110T6. There's quite a large disparity in pay among top management. A deeper dive may be warranted. The company's short-term incentive plan is based on policy in force growth, accident period, gross loss ratio, and adjusted EBITDA. Each had the opportunity to achieve up to 300% of their target annual cash incentive award opportunity. These are all excellent targets. Alexander Tim gets paid 150% of his salary as an incentive, compared with Mahicha, who gets paid 100%. This is a large gap and warrants further investigation on why this is. Root's Compensation Committee granted PSUs to the named executives on November 13, 2024. This table lists any equity options that the executives had outstanding. The board has a general plan in case of termination of high-level executives. The executive would have been entitled to 12 months continuation of their then current base salary, pro-rata incentives, accelerated vesting, and health benefits. If this agreement was triggered on Dec 31, 2024, Alexander Tim would have received 70.59 others in $689,610 in accelerated equity vestings. The CEO to median employee pay ratio is 148:1, which is below the average for the S&P 500. The information presented in this section demonstrates a significant disconnect in pay. These are the main performance measuring sticks. The board recommends shareholders to approve of current executive compensation. Now, with all that legal information, let's get into my opinions of the business. So what's my take on Root? Root appears to be making strides in the right direction. Their move toward profitability is encouraging, and growing their premium revenue stream is always nice. But let's be realistic. The executive compensation packages raise eyebrows, especially when you factor in their past performance. It makes a shareholder question if the business is in the right place. Key opportunities lie in leveraging their tech-driven approach and expanding their partnerships. However, the insurance industry is brutally competitive. Root needs to stay ahead of the curve. The road ahead isn't without its bumps. In conclusion, Root is a company with potential, but it's not without its risks. Keep a close eye on their ability to actually achieve sustainable profitability. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, be sure to like, comment, and subscribe for more deep dives into the world of corporate filings. Until next time,